I'm going to be going over how I was able to make a little over 3K this week, aka about 11R on the R multiple on TradeZella. And I'll be going over the exact strategy I use to find my levels of interest using auction market theory. Before I go into my trades, I wanted to go over how I view the market really quick. Just a quick introduction on how I view it. And essentially, I view it as an auction. And its primary focus is to facilitate trade in a two-way auction process. You can see this in any market: car market, housing market, stock market, crypto market. It's all the same auction process. So the market moves up until the last buyer buys, and the market moves down until the last seller sells. And this process continues until we balance out and seek out fair value of an asset. And if you want me to go more in depth with this, let me know in the comments. I will gladly explain and then also post a resource down below in the description. But essentially, there are two ways the market trades. So 80% of the time, the market's balancing out. And if you can identify what market conditions that whatever instrument you're trading, so I trade ES, whatever conditions it's in, you can capitalize on the quote unquote right kind of trades. So in balanced conditions, aka some people call it chop, some people call it consolidation, doesn't matter, it's all the same. Balanced conditions, you want to fade the extremes. So up here, this is the upper extremity and this is the lower extremity. So whenever price comes into the upper extremity, instead of playing the breakout, speculating the breakout, you would want to sell the high. And then to the flip side, whenever it comes down to the lower extremity, you buy the low. And that's essentially how you can catch reversals in balancing out conditions. And these reversal kind of playbooks work the best in balancing out conditions. And to the flip side, we have imbalance. So price breaks out to the downside. Obviously, the best entries now would be to look for short continuation entries until we seek out areas of older value or balancing out periods. That's where price likes to gravitate towards after trending slash imbalance periods. So again, like that visual I showed, we go back into balance. So here you want to fade the extremes, and then let's say we break out again. That's when you can look for long continuation entries. It's a very core basic of how I view the market, but once you can identify the conditions into play, that's when you know, okay, we're in balance. Okay, I'm gonna only look to fade the extremes. I don't want to play trending entries. And then vice versa, when it's trending, you don't want to be trying to catch reversals into a strong trend, and you'll just be asking to catch a falling knife. Monday was a little under a $900 loss, and going over the context goes back to what I said about after an imbalanced period, price likes to gravitate towards older periods of balance, aka fair value. And 8.5s was my key level of the day, as it was a prior balance high. We consolidated here, and we built fair value, and we broke out to the upside. We came back under it, and we balanced out again, and you can see we acted as resistance, and we were coming back into that prior balance high. So how I was looking at this day was I wanted to look for ways to sell the high up there. I said here, if it fails to hold, I would expect a peak above those 8.5s and trigger back into the 5.72, 5.68 target that I had. And my first two entries of this day, they were right off of the open. I feel 50-50 on these because my edge was triggering and I had a bunch of confluence across the board with leading equities leading into resistance, but also they were at market open, so they could have been avoided, could have not, but at the end of the day, it's like you have to put on risk when your plan is triggering, and I gladly took those quick stop outs for the day. And after that, I was like, okay, I'm gonna let the market develop here. So those are my first two trades. Clearly stopped out. It was a little bit tricky around this 8.5 level because it didn't exactly reject the 8.5s, and this is where you have to get creative with the way you enter and how you view the market. So my next two entries are actually really good, and I'll show it here on a Bookmap visual. Let me pull up Bookmap. Okay, so right here, after stopping out in the morning at that open, I spotted some selling activity at the high. So I said to myself, okay, if I could spot some selling activity up here, offers defend, I wanted to find ways to play short for a pullback entry. I took this pullback entry here, and I have a rule where if it starts to consolidate slash lacks continuation and it's not moving in my favor, I like to take it off early to get a better entry. And I wouldn't normally recommend this, but based off of my journal, the best trades work out for me right away. So that original risk on that was 375, but I ended up taking it off for a 2-point loss. And then my last entry of the day, this is where it bit me in the ass, and it was a pretty big opportunity cost on my part. I could have done a better job on this, but it goes to show like trading isn't perfect. So we broke the high of day, and I spotted selling activity here. I took it short off of this. Market looked like this, stop above the high, and my risk on this was 2.5 points to make a potential 16 into the target. So trade worked out immediately in my favor off of this high of daybreak, and I ended up taking it off a tad bit too early, applying my risk management rule, and that ended up biting me in the ass because the trade ended up working out in my favor. You can see we tagged the low of day area slash opening print, and then eventually I ran out of bullets to stab at the market because I gotta follow my risk management rules, and we ended up triggering down into those 7.2s. We barely tagged those 7.2s, but I most likely would have been able to get a scale off. So what the tape looked like here, I got it off of that, and it bit me in the ass because it ended up working out in my favor. So that was Monday's trading day. We'll move on to the rest of the days. Next 2 days were the exact same setup, and they all derive from this 718 profile. And the reason why this was so key for me was because this initiated that move down into that downtrend. And this is a TPO market profile chart. Again, I can go more in depth with this, but I'm just going to go over how I view it. I could call it supply You could probably spot this on a candlestick chart as well, but this is how I view supply zones and demand zones. So this was an upward distribution separated by singles, and these singles, you can see like the 1 period and that C period. You can look at that as an imbalance period, and where there's more distribution, that's you can look at that as a basing candle. So this is where I found this 5643 level, to call it 5655 for my area of supply, and this was my main watch for Tuesday and Wednesday where I wanted to short it from. Along with that context, you can see this was before the market opened as well. I was watching that. Along with that context, despite ES showing relative strength, the market and overall market was showing relative weakness. You can see here NQ, look at this swing high. ES was coming up to that swing high and NQ was nowhere near it. And what gave me even more conviction on this was along with the Dow. Look at the Dow weakness. It was still below this daily supply zone and that lower high pattern, and then the Russell as well. Tuesday, August 20th, made over 1200, and you could see right away the risk management behind it, which is what I want to emphasize. Despite having a 50% hit rate, I was able to make this loss back times 10, and that goes to show the importance of just managing your risk, and losses really don't matter. So for quick context purposes, market opens up. We had a low volume rally right into the supply zone up here. I take the market short. First entry. Stop never triggers, but I ended up taking it off early because I didn't like my entry at the time, and in hindsight I should have stayed in. But it goes back to what I said, like losses don't matter, and if you just have the mindset of the next shot, next trade mentality, that should reward you if you have an edge. And if I had put my head down, I would have not been able to capitalize on this move. So immediately I re-entered. Market looked like this at the time, and I was never in drawdown on this trade, and I was able to press this. My original target was 2921s, but I was able to press it all the way into that low of the area and got out off of that buying down there, which took care of almost like a 7R trade to cushion off those losses. So what the tape looked like up there, just to showcase it really quick, which is what I use to get in trades. First entry is up here. I took it off early, but immediately after I re-entered off of this because the 4-3s were defending, and because the selling was so heavy into, oh shit, my bad, into my target, I saw no reason to sell yet and cover until after here when the market looked like this. So that's where I got all out. Like I mentioned previously, what you're going to notice behind these setups is the repeatability of this system and edge that I have. And again, like I said, Wednesday, August 21st, I was watching for the 5642 to 5643 supply zone again. And I was able to make some money using the same context. If anything, better confirmation for today because I had more context developing and going over those trades. Again, a 50% hit rate, but look how small the loss is compared to my winner. This is why hit rate is irrelevant in my opinion, because if you can have your winners take care of times 3, 4, 5, even 10 of your losses, you'll be profitable in the long run as long as you have a system that works for you. So I took a first entry at this candle right here, but I immediately took it off because I had a 4-point risk behind the trade. and the target was 8 points away. 2R is still pretty solid to me, but with the way I have standards with my entries, it wasn't something I was really comfortable with, and that goes back to knowing being in control of your positions. And so I took it off, speculating a better entry, and never got it. And what sucked about this was I literally watched it run into my target. And I already started this day off in that mental rut because I was like, damn, like in hindsight, I should have just held. Because my stop loss would have never hit and target would have triggered. But this is an important lesson on never putting your head down. Because, again, I would have not made money today if I had put my head down. And fast forward to the second trade I took. This was a quick break even because I spotted. Let me go over to the live commentary. Right here, I said, I can't chase price. I just can't because it's not part of my system to be doing that. I said here, I want to see a pullback into this general region to play a seller's defense. Mainly watching that 3.8 positive 600, 900 delta. Did exactly that. Got an entry up here at this pop up into 3.8s. Let me show you in real time. Actually, it looks better up here. Got an entry off of this 3.8 pop. Boom. Worked out immediately. I was targeting 260s here, but ended up just lacking continuation. I took my break even stop. It was almost a 4R on that trade at one point, but it goes back to never putting your head down, right? Because if I had put my head down, I would have not been able to catch this last trade of the day. And so off of this, we saw some strong buying coming in. And at this point where my head was at was, okay, this buying is strong. Let me just wait until I can see trapped buyers above a high or look for longs at this point because I had a long thesis behind this. And with this strong of a buying, I was like, okay, I ended up voiding shorts because I didn't want to catch a train to my face. I voided shorts until we got back under 4.3s, and it goes back to putting yourself in the shoes of other participants. So people are longing this breakout, right? They're longing above the yesterday high without realizing that we're in a longer term supply zone. We're in balanced conditions in a temp breakout of value where responsive selling is expected. So I knew that if we can get back under this structure right here, longs could stop out and it could fuel a move lower. So I used that as a reference to get in shorts, and I was able to capitalize on that once we got back under this structure, this trail of buyers. Because if the market leaves a trail of buyers, it shouldn't revisit that. And because it got revisited, I was like, okay, this could be weak. And I got in off of the sell stop analysis right here at getting filled. Not the best entry in the world, but it goes back to trading is not perfect. So I got filled at the 4.1s, risking 3.25 points. Sell stop analysis. Hit my first target at the 3.1s. I got out the 3.1s and pressed it all the way down into low of day area where I got all out of my shorts, and that trade took care of that one little loser that I took earlier on. Final trade of the week, a little over 1,500, and it's using the same concepts and system that I used to find the prior supply zone. And on a candlestick visual, the level I was watching for on Thursday was the 5.5 to 70 supply zone, which initiated the move down that started that downtrend, and it was a prior balance low area. And like what I've been saying, this price likes to gravitate towards older areas of balance. And the context has been the same this entire week. Overall market has been weak other than ES, and the cherry on top was that the VIX is moving in an uptrend. A little bit of sauce here. With ES moving up, making higher highs and higher lows, VIX should be moving at least sideways and making lower highs. And off of this visual from Thursday, VIX was clearly making higher lows and higher highs. So that hints at a short-lived up move. And where I got this 6.2 supply zone from, I made it one big zone, but it was the consolidation here before we move back down, like I said, and the 6.5s was a prior balance low. So I made it one big zone. That's what the visual looked like on the profile. And using the 5-day volume profile, I said, okay, responsive selling is expected above value. So I would expect sellers to step in here. And let's go into the trade. The market opens up. Let's go back. Market opens up right here. I'm just awaiting 6:45 PMI news. So I already spotted some selling developing up here. And going to the live commentary, I said here at 6:39, it's all time stamped. What I would want to see is a break above high day to trap buyers or defense of the sellers off of that PMI reaction play short. And I got that to exactly play out. We broke above high of day. You can see this 266 positive delta. It happened really fast. Ideally, I would have wanted to catch the high of day break, but I waited for a pullback entry, got in off of that small risk, and that is a textbook morning top, which is one of my best playbooks. Right here, I was risking 3.25 points to make a potential. I was really looking for these 4.4s, but I could have done a better job of pressing it into my target. So this trade works out immediately in my favor. I got in off of that. Break even stop triggers here. Never hits. And I scaled out one on this low of daybreak. And I scaled out my final one at those 4.4s. And in hindsight, I did leave a good amount of money on the table. But it goes back to just having a plan and following it, because everything always looks better in hindsight. And that was how I ended off the week with an 11R/3K. So if you want me to go over more in depth on how I find my levels, feel free to let me know in the comment section below. I'll be trying to post out more content in the future. I'm just really focused in on my own trading in this point, but looking to provide some value back. So just feel free to let me know. Peace.